Have you ever wondered how to start investing? If you're like many, you've probably built up a good amount of savings, but aren't quite sure how to put them to work. You've heard of the potential for financial growth through investing, yet it seems like an intimidating and confusing landscape. Terms like stocks, bonds, commodities, futures, and options sound like a different language. Considering a financial advisor has likely crossed your mind, but the costs make you hesitate. And you're wary about entrusting your hard-earned money to another person. You might have tried to comprehend some financial literacy books, but the complex language only makes things more perplexing. News of market crashes, bursting bubbles, and failed risky investments doesn't help ease your fears either. Despite this, you recognize that leaving money in a savings account won't significantly increase your wealth. You're aware that inflation gradually erodes your savings value, and the minimal interest your bank provides is hardly satisfying. Therefore, you realize that investing is crucial, but the process appears daunting. Fear not, for today a journey unfolds into the world of investment, simplifying the process into easy-to-understand steps. To start with, regard your investment portfolio as your financial garden. It's a vibrant ecosystem of assets that's akin to a rich and diverse garden. The way a garden flourishes with a variety of plant species, their coexistence and balance, mirrors how a strong and prosperous investment portfolio thrives. It's all about possessing a broad spectrum of diverse assets. This philosophy is universally known as asset allocation, a cornerstone strategy in the finance industry, pivotal to navigating the complex world of investments. Let's delve deeper into this comparison. Your financial garden is a thriving habitat, teeming with rich flora. Each flower in this garden represents various types of investments, namely stocks, bonds, and cash. They all play a vital role in maintaining the health and growth of your financial garden. Visualize the roses, bold and flamboyant, representing stocks in the investment world. They catch the eye, often providing quick growth due to their inherent ability to attract attention. Then we have the daisies, consistent and reliable, mirroring the characteristics of bonds. These investments are steady performers that show gradual growth, but over a more extended time frame. Their reliability is what makes them integral to the portfolio. Much like the daisies in a garden, they offer a sense of stability. Lastly, we look at the lilies, evergreen and readily available. They stand for cash. Like lilies, offers immediate liquidity. It's always there, providing a sense of security and the capability to seize opportunities as they arise. This colorful mix doesn't only grant a visually pleasing array, but also ensures that the health of the garden isn't dependent on a single type of plant. Likewise, a diverse investment portfolio reduces risk by spreading investments across different asset types. It's this comprehension and application of asset allocation that can make your financial garden thrive. Consider this. In the world of finance, stocks, bonds, and cash are the roses, daisies, and lilies of your financial garden. Stocks, they are like roses, beautiful and appealing but thorny. Much like how a rose injects a sense of awe, admiration, and desire, stocks too can often lure investors with their high returns and the tantalizing prospect of substantial wealth. However, just as every rose comes with its thorns, are always accompanied by risk. A higher promise of returns is inherently tied with a greater risk. It is not uncommon to see the most alluring stocks crash and burn, leaving the investor to nurse their financial wounds. Moving on, let's consider bonds. They are the daisies in our garden financial instruments. Daisy, a flower that is not as flashy or as attention-grabbing as the rose, yet has its own charm and beauty. Similarly, bonds may not offer the spectacular returns that stocks can, but they bring their own allure to the table. They provide steady, consistent growth, often with a much lower risk compared to stocks. They are a safe investment for those who prefer stability and consistency over unpredictability. Lastly, we come to the lilies of our garden cash. A lily is an elegant, timeless flower that symbolizes purity and innocence, much like how cash is considered a safe bet in investment. Cash is always there, always available, safe, secure, and quick to liquidate. However, just like lilies that do not stand out in a colorful, diverse garden, cash investment does not promise high returns, yet it offers the lowest returns, but it is the safest. The key is to balance these assets in a way that aligns with your financial goals, risk tolerance, and investment timeline. This isn't just a tip for beginners, but a fundamental principle that even experienced investors need to keep in mind. Consider your investments as a garden. Each asset class, be it equities, bonds, or real estate, are your plants. Some are like roses, vibrant and high-yielding but also require more care and bear higher risks. Others are more akin to daisies and lilies, less flashy but more resilient and low risk. Your portfolio is the soil, and your job is to cultivate this space with a balanced mix of these plants. Each one has its strengths and weaknesses, and your task is to leverage them to your advantage. A fertile portfolio is that only has roses nor just daisies and lilies, but a well-curated mix. Your age, financial goals, and risk tolerance play a major role in how you should allocate these assets. A young investor who is willing to take high risks for high returns might plant an abundance of roses. They have time on their side, and even if a few roses fail to bloom, they have the years to plant anew. Meanwhile, older investors nearing retirement might lean towards daisies and lilies. Their priority is consistent growth and preservation of capital. They might not have the luxury to wait for another rose to bloom if one fails. In the end, the goal is to have a flourishing garden that can withstand the seasons. A young investor with a high risk tolerance might plant more roses, while a nearing retirement investor might favor daisies and lilies. Next, remember the principle of diversification. It's the cornerstone of investment wisdom, akin to the gardening strategy that cautions you not to plant just one type of rose. The importance of diversification cannot be overstated. It provides a safety net, shielding you from possible financial downturns. Investing in only one type of stock is a risky game. It's a game of all or nothing. It's comparable to planting a single species of rose in your garden. Just as a disease can wipe out your entire rose crop if you've only planted one variety, a downturn in a particular sector or a poor corporate performance can devastate your investment if you've only bought one type of stock. Diversification within each asset class is crucial. Buying stocks from different sectors gives you a safety net. If one sector is hit, others may remain stable or even thrive, balancing out your losses. Similarly, in bonds of varying maturities shields you from interest rate risks. Some bonds mature early, while others take longer, providing a steady stream of income over time. Holding cash in different currencies also a form of diversification. Just like you wouldn't plant roses alone in your garden, you'd mix in other plants too. You must not hold cash in just one currency. Having cash in different currencies guards you against currency fluctuations. Like the principle of biodiversity in a garden, the principle of diversification in investment is about spreading the risks and maximizing the potential returns. It's about not putting all your eggs in one basket. Just as you wouldn't plant only one type of rose, you wouldn't invest in only one type of stock. Buy stocks from different sectors, bonds of varying maturities, and keep some cash in different currencies. Now, on to the third step, risk management. This is akin to putting a sprinkler system in your lush, green garden. It is not going to prevent the storm, but it could greatly help your garden withstand the harsh conditions. The sprinkler system is your backup, your insurance against the unpredictable weather patterns. In a similar vein, management is your shield in the world of investments. In investment terminology, risk management involves a process of regularly reviewing and adjusting your portfolio. This doesn't mean rashly buying or selling stocks on a whim, but making calculated decisions based on market trends and financial analysis. It is a meticulous process that requires patience and discipline. Markets are dynamic, they are constantly changing, and in response, your portfolio should also evolve. It's not a static entity, it's a dynamic living thing that grows and adapts with time and market conditions. A portfolio left unattended is like a garden left at the mercy of the elements. It's necessary to prune and water it, encouraging growth where needed and restraining where necessary. If stocks perform well, your garden might become too rosy. An overgrowth of roses can be just detrimental as a lack of them. So in order to maintain balance, it's important to counteract this by selling some stocks and investing in more bonds or cash. Rebalance it by selling some stocks and buying more bonds or cash. Finally, patience is paramount. Gardens don't bloom overnight, and neither do investments. It might be tempting to pull out your investments at the first sign of a market downturn, but remember, investing is a long-term game. Stick to your strategy and give your investments time to grow. To summarize the key points about building an investment portfolio: 1. Understand asset allocation. Balance stocks, bonds, and cash according to your goals, risk tolerance, and timeline. 2. Diversify within each asset class. Don't put all your eggs in one basket. 3. Practice risk management. Regularly review and adjust your portfolio. 1. Be patient. Investing is a long-term game. Embarking on an investment journey can feel like navigating a labyrinth. But with these principles in mind, you're well equipped to start building a robust investment portfolio. Remember, every great garden begins with a single seed. So why not plant that first financial seed today?